gonna freestyle here. Look, it's Friday. It's Friday. It's Freestyle Friday. We're just gonna get right into it. All right, Freestyle Friday. We're gonna get right into it. All right. So what we're going to do now is we're going to go over gold. Gold's going to be the first thing we're going to do. This call is going to be about trading psychology, goals, and so on and so forth. But like I said, we're going to freestyle this. This is now recording. So whether you're watching this live, people hop on midway through. If you know anyone that could benefit from this, you could definitely go ahead and share this link out. But for right now, we're going to get right into it. So the first thing I noticed, matter of fact, I'm going to turn that down a little bit. I'm actually going to broke classics. The first thing I'm noticing on gold from back from, let's see, this is really when it all started. This move here specifically on gold, from down here to down here. Once that move happened, that had signified to me that we are probably going to be downtrending once that happened. So then, of course, when this came up and grabbed this order block right here, which is the last up candle right here, the last up candle before that whole down move. Okay, that last up candle before the down move, once that had been grabbed, it made a pretty drastic move down. And notice that it came down specifically to sweep this low right here. Once that low was swept, you see, swept that low. It made a little bit of move up, came back down a little bit further, and it swept this low as well. Okay, so it swept two different lows. However, the way I play smart money is excuse me. Sweeping the low, broke this structure, came back down, and so on and so forth. Right now, as you can see, pretty much not really much is happening. I don't really have a bias on gold as far as what I think it's going to do. I just see a lot of consolidation. You guys probably see that too. I have a few zones I have marked up, however. But right now, on the smaller time frame, you see like you pretty much seeing it sweep zone after zone after zone. I'm going to show you a couple examples here. So, perfect. Okay. This, oh my gosh, Zoom is in the way. This liquidity right here, equal highs. Okay. And for those of you watching this live and recorded, an equal high is pretty much just a structure that has repeated. It's almost like a resistance, okay? It's almost like a resistance, but wherever there is equal high, there is stop loss above. And in that stop loss is what we call liquidity. That's the liquidity area, okay? So as you can see right here, there was a move that took out that liquidity. This move right here took out the liquidity, and then we're moving it back down. Now notice, before it took out that liquidity, what was the last candle before it took out that liquidity? What was the last candle that took out before it made that move up to take out the liquidity, which happened right here? Before that happened, what made that happen? It was this candle right here. Now this is where it gets really interesting. This candle right here. Do we see this candle? Everyone see this candle right here? What did that candle do? What did that candle do? It took out these lows right here. That's the lows that it took out. Took out those lows. Not only did it take out those lows, but it came back. Now, once it swept this liquidity up here, where did it come back to? Came right back to this candle right here. And then it moved on up. Okay. Moved on up. Now, there's a couple other things I'm seeing. This liquidity got grabbed right here. Seeing that. I'm seeing, let's see. The most recent thing that happened on gold was, okay, yeah, here's well. This is a review from the week, by the way. This is kind of just like a review of the week of different trades that I saw play out. This candle right here on the 5-minute was played, I remember. Went off that candle, shot up, and where did it reject? It rejected, literally rejected this 30-minute order block to the T. This candle right here. That's where it rejected. So these order blocks are playing off pretty cleanly on gold, although it's kind of consolidating. These are still like 200, 300 pip moves. So it grabbed this order block right here, right? And it shot straight up to this order block right here, wicked it to the T. And then after that happened, what happened? This is what I want to pay attention to right here. This is what's interesting. Okay. So let's just take this back. Mindset, get tunnel vision and lose money in binary option. You know, I don't trade binary option. I think it's because I just know my personality and, you know, I'm working through my own habits of being impatient. And I feel like with binary options, it can create habits of impatience. And I don't really want to even mess with that. Just my personal take on it. So grab this 30-minute order block. I want to point out two key zones here. And I just want to show you how these order blocks are literally played off perfectly. It's kind of insane when you really think about it. That candle right there and that candle right here. Are you guys with me? Do you see those two candles? Wicked. It came up, wicked that candle to the T, came back down, wicked this one. It's funny. And then, you know, going up from there. Now what happened was it's like a ping pong. Like it's like ping pong, dude. Like for real. You could have bought it here. You could have sold it here. Could have bought it here. Now this is awesome in hindsight, of course, but they're playing off these order blocks pretty clean. And they just swept the high, gave us a nice candle, rejection candle, and heading back down. But what I'm looking for on gold is simply this area. This, where is it? This is what I'm identifying. I would potentially consider taking a trade off this area. However, I like the 4-hour zones better. You know, I'm ultimately looking for here. And to be honest, it's just messing around until it gets to either that zone or this zone. That's where we're going to catch the big moves, one of those two, but it's just playing around in the ocean right now. But what I want to note, though, however, is that this liquidity, okay, this liquidity was swept. Okay. That liquidity was swept. So when multiple lows are swept, that means that the money's been taken, therefore it should continue up. So with that being said, we have this candle that got played here. We have that candle that got played there. So essentially, you know, just simply looking for this candle right here, that guy right there. And if it goes lower than that, it's probably going all the way down. So honestly, though, so you could look for a short-term buy here on this, in my opinion. However, ultimately, I would think that this is a pretty good area to come expect to see. Probably just, you may not even want to take that. You may want to just look for this sell as well. You might just want to look for that sell right there. Okay. That's what I'm seeing, because this whole move upward right here, that candle, the yellow one, everyone sees that candle, it took out that high, took out that high, took out that high, and it took out that high, took out all those highs. So it looks like, if you ask me, we could definitely be seeing sells here. Just keep it in mind what could happen. You know, we could catch a buy off here, could catch a sell off here. Those are probably the short-term zones. So we're looking at either one of those. So maybe something like this. If it sweeps that zone, who knows where it's going from there. But that's kind of what I see on gold. That's for next week. However, I'd have to look at the news, see if there's any news. Does anyone know if there's any news next week on gold? But when it does catch the sell, whether it's here or whether it's, higher up, we're definitely at least taking it down to here. Because we see this candle over there. So we're going to see that. That's what I would expect to happen, but I don't know. It just looks like it's consolidating at this point. Okay, matter of fact, while we're on this topic of consolidation, I do want to point this out. Okay, we can find I believe it's called equilibrium. Okay, we can find the equilibrium. So the 50% point. Perfect. Okay, so I want to explain what I'm just marking here. So this body, the body of the low of the consolidation, which is right here, and then the body of the high of the consolidation is right there. So the 50% point, okay, the 50% point is right here. Okay. So whenever it breaks out of this zone, this is when we'll be looking to enter like a pretty good trade probably. So when we get a clear break of this consolidation, when we do get a clear break of this consolidation, whether it's up or down, we want to find the candle, the order block that was the last down before it break up or the last up before the break down. And then that's where we want to enter for it to continue down, if that makes sense, or continue up. So whichever one that actually breaks out first. And then we'll pretty much essentially take that trade, this being the target for a sell and this being the target for a buy. I think we could potentially see this one play out. We could get that. If you do take the trade within the consolidation before it breaks out the consolidation, I would probably just close it on an intraday level which is still probably you're still catching 200, 300 pips on that at least. But when it actually breaks out, then comes back, that's our trade we hold for maybe 700,000 pips. I think we could definitely capitalize on that trade right there. Either one, whichever one happens, whichever does that make sense, by the way? Does that make sense to everyone? That's the consolidation zone. Whenever it breaks out, we're looking for the order block that was the last look down before the up, or that's my hypothesis. The dollar looks just as ugly right now. However, I'm seeing the dollar's probably going to go up. And I'm going to explain why I think that. You know what? I don't know if I can say that, matter of fact. But what the thing is, this is what I'm seeing on the dollar. It's in this area. It's in this very interesting area for the dollar right now. It's in this block. It's actually deep within that block, matter of fact. And I think if you go even lower on the 4 hour within this weekly, within this monthly block, you're seeing, where is it? Shoot, it's way over here. I believe we see something here. I may be wrong here. Okay. So I do want to note that, okay, I'm going to mark it in blue. Let's see if it hit this. I'm not sure if it hit this or not. That 4 hour order block is in blue. And then there is a stop loss that was ran. Or it could be, let's see. That one right there. It's probably one of the two that it played off of, I'm guessing. Yeah, okay. So it played off of there already. So that's, does anyone trade Wyckoff, by the way? Does this look like the beginning of accumulation? Does it? Or is this some type of like inverted, it kind of looks like that if you ask me. I don't know. I think once it breaks here, that's confirmed. Once again, it's the same thing. It's the same thing as gold. If you ask me, I think we're probably seeing a bullish on that. I believe USD CAD confirms this, if I'm not mistaken. Okay, USD CAD. Yeah, I thought so. Yeah, so USD CAD's interesting too, because it seems to not be able to make up its mind, but it hasn't really done anything to say it's going up quite yet, I wouldn't say. If you look on the weekly, there's signs of rejection. You could see it up. we're going to have to see like this next week. Let's see if it continues to consolidate or not. But my main focus is gold. That's what I'm looking at. That's what I'm looking at. We're going to take that whichever way. Probably going to catch this sell right here. Could probably put a limit on this one, to be honest. Put a limit right there and just go for it. I think the main perspective that's key here with trading is to just, whoever's watching this, man, like to not be in a rush. Like just don't be in a rush. There's no rush. Because rushing implies that you're looking to get somewhere. And the reality is you never really get there. You know what I mean? You're always striving for more. So with that being said, you just appreciate the now. I mean, that's really where it ultimately comes down to. Just appreciate right now, appreciate the process, appreciate each step. I mean, you can only really take control of the step you're on. The trade you're about to take is the only one that matters. You know, and to not be so antsy to look for the next trade. And just let the trade come to you. Whatever your rules are, whatever your setups is, man, just wait for that. I think this is a good setup right here. I would probably take it right there. I would take that. I think that's good. I like that one. Yeah, dude, does anyone have any questions, or does anyone have any charts that they want to add to this, or does anyone have anything they want to go over? Questions, comments, observations, not only on trading, but just in general. You know, we'll definitely probably keep this call short. I definitely wanted to review gold and some of the things that happened this week, but let me know. You guys have anything? I said we take this trade, man. I say we look for this trade next week. That's what I say. This one looks juicy to me. It's looking nice and juicy. Very juicy. You're excited for this one. This one could be a big one. This one could be 400 pips. It could be more. It's nice. I like it. It's great. And especially when it just keeps sweeping lows. It just keeps sweeping all these lows and stuff. So this candle never got played. So I think we'll probably get a reaction there, to be honest. At some point. It looks like a pretty clean candle for it to come back to as well. I think this is probably the first trade of next week. Probably the first trade next week is right here on this. If we get it, or it may come down here first. But yeah, that's all I got on gold, man. That's what I'm looking for. These are my zones and so on and so forth. Hope you guys enjoy. Hope you guys can capitalize off this for next week. For those of you watching the recording, do you market, execute, or put pending order for your trades? I feel when I market into before, my entries are a little off. Okay, good question. Now, if it's in my trading window, then I'm normally market executing. But let's say, for example, it's a high time frame trade, swing trade, or there's just a limit that there's a clean order block. Okay, so if there's a clean order block like this one, you could probably put a limit on there. It just depends on what your own personal rules. I put limits on clean order blocks. And when I'm saying order block, of course, it's the institutional candle. It's this candle right here. So when it gets up there, I'm expecting a reaction. So if the risk reward is good, you know, go for it. Go for the limit. But if you do want to manually enter instead, you could wait for it to get up there. Set an alert, wait for it to get up there, and then wait for whatever price action you look for. For me, I look for candle confirmation or rejection candle. So some type of, Japanese candlestick pattern, basically, which would be like this one here, should be like this here, rejection, some type of rejection. You want wicks, you want engulfing candle, hammer candle, like that one right there. That's a tweezer candle. That would be kind of an example of reversal candle. And not only the candle confirmation, but where is the candle confirmation? Is it in the zone? And I think when people mess up with entries, it's usually they enter too early. or they think it's moving already, so they chase it. It's one or the other. They want to don't want to miss it, so they enter before it gives confirmation, or basically it rejected, they hesitated, and then they waited till it was in profit. I think it's one or the other. I don't know if either of those are you. But what I would do is I would just set up some type of clear rules on what you're going to do to execute. Because it doesn't really matter what your rules are. It's just the matter of you knowing what they are and the fact that your ability to execute those rules. Because I don't think there's any right or wrong way to trade. There's no really right or wrong way to do anything. It just depends on what works for you. How do you see the market? What makes sense to you? You know, what makes sense. But however, this is what I will tell you, I've been noticing happening a lot, especially on gold. This one's really key. Like on gold, like whenever it sweeps a high or a low and gives the candle confirmation, I'm entering. Like this right here. I mean, even this right here. I'll give you two examples. Okay. This low right here, that low, it got ran. And then what it did was it didn't close below. Do you see how it swept the low, but it didn't close below? And it gave you this candle confirmation. That is a hammer. That is a dragonfly doji. That is indicating that it's going to go up. Okay. So that low got taken. And then that high got taken. And what did it what happened? It gave us, this is a tweezer top candle confirmation. It swept the high and then gave the reversal candle. So I'd enter off of those candles. That's what I do. When I manually execute, that's when I'm manually executing. Otherwise, I'm setting a limit at an order block. Those are the two types of trades. Handle camera, yes. Handle camera in either a liquidity pocket or a order block. That's what I'm looking for. Liquidity being the stop loss of a previous low, and then the order block being the last up candle before a down move, you know, coming back up to that candle. You could put a limit there at that. Or, you know, you could wait for this this candle confirmation right here, which it did give. It did give you, you know, something to work with here. It gave you engulfing, you know, it gave tweezer top, tweezer bottom. Yeah, I study Japanese candlestick pattern. That's what I like to enter off of. I find that they're pretty accurate. But Japanese candlestick patterns alone are not enough. When it's in the zone you're looking for, that's when you're getting pretty good confirmation that, you know, you're going to get what you want from that. This one as well is a good example of, oh my gosh. Yeah, I mean, even this would be, is what I'm saying as well. This is what I call a short-term low. It's a short-term low. Because why? It's not this low. It's not the swing low. It's not the swing low, but it's a short-term low. So this right here, it came and swept that short-term low and gave tweezer right there. So yes, you could have entered here. You probably would hit break even, but it still went in profit, you know. That one still went in profit 90 pips before coming back to break even. So depending on if you closed or not, you probably would have had to take profit right here. Just missed it. But still, same thing. And even this here would be an example of something you could take as well. Where is it? Oh, not there. I think it was this right here. Yes, right here. Perfect. This candle right here. Okay. So I'm not sure what kind of candle confirmation it gave in here. If it did, let's see. Yeah, it came down, gave an engulfing. Okay, yeah, this is pretty interesting actually. If you look at it, so this one wasn't as clean, but it's on the 5-minute. Typically, a W pattern is considered a mitigation because it's small time frame breaking price action and so on and so forth, like this right here. So it gave the engulfing. I'm going to clean that up actually. It came down within the region that you're looking to enter. Small time frame, this is actually a high right here. Maybe on the 1 minute. You might even see this on the 1 minute. I may want to take this down to the 1 minute. This is interesting. We may get an example of how to enter on the 1 minute. This is cool. Wow. Nice. Okay, perfect. Okay, so the black line is the area for entry and a little bit below the black line because this is the open of the candle. I think this is the 50% of the candle. Yeah, so this is essentially what's happening. I learned this from Trade with Matthew. Okay, it's downtrending on the 1 minute because everything's fractal. It's downtrending. Okay, lower lows, lower highs, and then at some point in time, what happened was this short-term high, once it got broken, which was right here, that indicates that the trend has shifted. Okay, so once you've identified that the trend has shifted. Okay, so just want to clarify. I like to draw the pocket just so you can see it clearly. That's where the high is. Okay, so once it gets into that pink box, which it did, it means it broke that high. What are you doing? It's an adult. Then now, what are we looking for? What are we looking for at this point? What are we looking for now? We're looking for what is the last candle before the up move right here. Now, this is where it gets very interesting. What if you would have put a limit here? Okay. What if you would have? What would the risk to reward be? This is crazy. I don't even do this yet. It's so advanced. I'm just learning this, but I wanted to show you guys anyway. But it's on Trade with Matthew. It's pretty crazy. So if you enter here, you're getting a 17 pip stop loss. And shoot, where is your take profit? Probably, who knows? Probably up there somewhere, or it would be on the higher time frame. But where is it? Yeah, take profit. At least right here. At the very least, right there. I mean, that's 1 to 10, but I believe it ends up breaking this high, if I'm not mistaken. Yeah. So it's like, what if you did that? Just a thought, right? You could have done that. That's a short term. I mean, this is a swing high. That's the take profit. Wherever you put the take profit, don't matter. Like you could scale it out different places, right? Doesn't matter. You take the profit there, take the profit there, whatever. You take a profit at some high. But if you actually would have put that limit there, let's see what would happen. What would have happened? I mean, like, that's crazy. Is that crazy or not? Like, is that crazy or is that just me? 150 pips on 1 pip drawdown. That's crazy. That's crazy. Are you kidding me? And it was all, and why do we look at the 1 minute right there? Why do we even look at the 1 minute right there? Why? Because it was within this candle. It was within that candle. Matter of fact, the way I'm going to illustrate this is usually what they do is illustrate what 50% or whatever. This candle was the candle that took out this low right here. Not only did it take out that low, but it was the last candle that went down. It was the last candle that went down. This candle right here was the last candle that went down before these highs over here were taken out. So that's the point of interest. That's the POI. So now once it gets back into that candle, that institutional candle, now we look for the small time frame confirmation within that candle because the green box is the candle. Downtrending into that zone, breaks the structure on the 1 minute, comes back down, grabs the 1 minute order block right there, poof, to the T. And then at that point, she's history. That point, she's gone. Oh yeah, she's gone. Now, this is an advanced tactic as well. I've done this before. So let's say, for example, you missed this entry, okay? Let's say you didn't even catch this entry right here. You missed it, okay? This is what I like to do. And I think this happens in Tokyo a lot. This actually was this was New York session. So if the move is going up, if you know that this was the smart money move right here, you know that it's probably going to continue up. Probably. You don't know for sure. Also, you see this high got swept and it dropped pretty low. That's cool. But if your bias is you're looking for buys, what you see is you see short-term lows on the way up to your TP. So if you miss it, or if you want to stack, this is where you stack. You come and look for equal lows to be swept within that move, which would be right here. It swept those equal lows. So you could probably enter off this, something you could actually do to enter a second position if you wanted, or if you missed it, then you're good. Okay. Something you could do. So not only did you have the 1 to 21 trade, but now you get another 1 to 4 that you could take. Right. Looks like that one would have hit break even right there. Even that one right there still went 100 pips in profit. You know what I'm saying? Like, you could have taken profit if you wanted to, or whatever, you know, do whatever you want. But yeah. So just a thought. Pretty interesting, right? Pretty interesting. Appreciate it, Curtis. Thank you. Sheesh, right? Sheesh. Yeah, so gold's looking good. Gold's looking good right now. The world, shit's happening in the world. Based off this daily, I'm saying it's probably going to go up. I think it's going to go up. I really do. I think it's going to go up. I don't know. We're going to catch some move next week, whether it's up or down. We're both. Thank you. I hope you enjoyed. Hope you got something from this. Hope you capitalize on it next week. I'm sending you much love. For those of you guys that want to get connected with me, not only, of course, there's 2 of you on here, but the recording as well. My Instagram and TikTok is infiniteabundance777. My Telegram is t.me/infiniteabundance. Sending you guys love and light. Let's get it. Peace out.